Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 2nd of October and we're joined today by Colin Bird, Executive Chairman of many a company. Welcome back, Colin. How's things?
Not too bad, thank you, and thanks for welcoming me back there. Things aren't too bad. In fact, we're very, very busy all over the place. So heads down and getting on with it. So
talk me through what a day in the life of Colin Bird is like. I mean, you know, if you're executive chairman on 4 or 5 companies, probably 5. What do you do? I mean, you get up and have meetings with their, you know, all the board and go through what news is there and how it must be hard juggling that many that role.
Well, yes and no. This mining business is a dinosaur, and it takes a hell of a time to get moving. And of course, once it gets moving, it takes a hell of a lot of stopping. And so I regard my job in life, and especially during this year, I've gone to great lengths to surround myself and to work with people who are very experienced, been around quite a while, know the business. And so it's not, if you like, it's not going down to the engine room every morning, because I think I just couldn't do it. What it is basically seeing getting to the bottom of results when results come in, setting programs for future activities, and of course troubleshooting where trouble is arising. And of course, that's real trouble. I don't get involved in the nitty-gritty. So a typical day is more or less monitoring and review. I guess twice a week I will hold a lengthy Zoom with the guys who are appropriate for a particular project to really get to grips where we are, and especially if there might have been a re-ranking of priorities. So every day is busy, every day is new, but nowhere near as unpredictable as you would think. And I certainly, with the people now we've got in our team, every day is not a firefighting day. Every day it's more making sure that the ship stays on the course, if you like, to New York, than every day realigning the ship and wondering where we're going to go. So it's very, 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 very interesting. And the biggest challenge, of course, is ensuring that you get absolute focus on the subject that you're talking about at the time you're talking about it. Meetings need preparation, but as I say, I'm fortunate enough to be surrounded by some very, very good people who are like-minded and take ownership of their projects. And what do I mean by that? Take ownership of the projects. What I mean is that they're proud of what they're doing, they know what they're doing, and they don't resent interference. You don't want to work with people who resent interference, but they don't need your 5 bob every 5 minutes to maintain the inertia.
Sure. Do you think since COVID that this remote working and decision making has been relaxed a lot, in sense of, there's a lot more decisions being done remotely over Zoom? Do you think that's kind of created more of a trust element in a lot of these these decisions?
I've got two answers to that. One is that 95% of my work during that period and continuing after COVID, the worst part of COVID was Zoom. A lot of frustration, Phil, not being able to visit the properties, but I put that right in the last year. And trod the ground. You really do have to trust the people you're talking to in a Zoom call. I mean, when the third party Zooms, I'm sat on the edge of my seat. I guess I'm a lot more relaxed with the team that we've put together. But sure. It's not the best environment. It's let's face it. If we had COVID and no Zoom and Teams emerged, their timing was very good. It would, and we were all dependent on Skype, which fell to pieces every 5 minutes. It would have been a very difficult world, but there's no substitute to me. Maybe it's because I'm from an older generation and not so high tech, as you guys know. It's better to me face to face. There's no substitute. There's absolutely no substitute for face to face.
Sure. I mean, just looking at moving on to the current climate, and we see the word used and unprecedented. Never been seen before. We've had the global pandemic. We're coming out the back of that. We've had obviously the geopolitical situation in Russia and Ukraine, and now we've got a serious economic disaster, energy crisis going on as well. So do you think that, and then we've seen the thing normally, when you've got inflation or hyperstagflation, whatever you want to call it, going on around the world, we see the value of gold as a hedge against inflation. And we're not really seeing a massive adjustment in the price of gold in the last kind of, sort of say 6 months. Do you think that this is unprecedented times and we haven't got a rule book, that this is being rewritten and nobody knows?
There's no, I agree with that. I certainly agree with that. There's no instruction manual for this one. I've always had the simple rule: strong dollar, weak gold, and I think that's what drove the gold price down. But we're seeing an escalation in the Ukraine war. That's terrible. We're seeing quite phenomenal 3 leaks or whatever it was in pipelines, which have never given a problem in years, and. We're seeing
how you can't think that sabotage is it's just too convenient, isn't it?
It doesn't. That life doesn't work that way, does it?
Yeah.
And we're seeing sham elections. So in order to get to the end game for escalation, and we've got a very immature Chancellor of the Exchequer. When I say immature, that's not a personal thing. What I'm saying is more or less not that politically experienced, but extremely well qualified. I've gone through his CB. And a new prime minister who have elected to swim against the tide.
Yeah.
Now, Phil, I've never been against people who swim against the tide. I think mankind would still be living in caves if we all swum with the crowd and ran with the crowd. But at the same time, I think the bet that those two were making is very, very bold and extremely risky. And there's a real tide swim against venture, which could have terrible implications, and the likelihood of his failure to me, I'm no economist, but the likelihood of failure seems much higher than the likelihood of success. Put that all in the same stew pot, and boy, it's a smelly old stew, isn't it?
Yeah, I mean, I guess the question that's on everyone's lips is, when is the stock market going to recover? When are we going to see some value into these? You've already talked about it in the past, the day of the junior mine or the day of the small miner. When do you think, and it's a very open-ended question, but do you think we're going to see something soon, or do you think that this is going to ripple on and we're going to just see? I mean, I saw a great phrase yesterday online, and I think it sums it up. The stock market is the only place people run from when things go on sale. Normally, if you have a Black Friday sale, you see people queuing outside shops to get the cheap wares. But it seems that people run away from the stock market when there's any sign of a sale on or a fire sale.
Well, the fear is a big thing. And let's face it, if you've got your hard-earned earnings, your retirement, or whatever it is, and you're locked up or you've got margin calls, you just see this thing going down, down, down. I, for one, think that the stock markets have totally overpriced in the States. When you start seeing PEs of 57 to 1, I mean, how daft is that? And then, everybody's gloomy when you put the chart up for a week, for a month, for a year. Put that chart up for all time or the last 10 years, and we're still a bit toppy. We're very toppy in the States. Yeah. And, the stock markets to me are just like a drunken man leaving a pub, going down an alleyway, bouncing against all the walls. He's going to get to the end of that tunnel, but boy, he doesn't quite know how. And when he wakes up in the morning, he's got a sore head and wish he'd never gone to the pub in the first place. I think that's where we are now with stock markets.
Do you think that there's a certain arrogance, the dollar being the global currency? Do you think there's an arrogance that America's too big to fail? I mean, how can the dollar, with their inflation levels, be so strong? Did you ever think you'd see the day where we almost saw a parity in the pound against the dollar, and it could potentially any day go under sub parity?
Yeah, but I never saw the day when I'd see $2 to a pound either. I'm pretty pragmatic when it comes to the currencies, and I don't think it's arrogance. I think if you in position of power in the States, you've got to protect that 401k. I've said it before, and I've said it a number of times. A Brit will meet, we meet in the streets and say, "Oh, it's cold this morning. This is a bit chilly for this time of year." And they meet on the train and on the subway and in Starbucks in New York and say, "How's your 401k?" And stock markets aren't allowed to go down because the 401k is the guide to the people's retirements, and a lot of people, their lives are surround daily fluctuations of markets. So it's a different environment, and they justify any reason that at the moment in the States for the stock market not to go down. But the cold reality of life, and it is a very cold reality, it has got to go down. It's too toppy. It's been too toppy for too long, and we've got to get normal PEs in place so that you're actually investing in businesses and not magic. And the UK, I think the UK at 6.6 as an index will probably be the best buy on the globe.
Yeah, I mean, the interesting thing now is from the point of view of the general stock markets, with the pound basically bombing, I mean, some of these companies in the UK stock market have got to be ripe for takeover, right? You know, US dollars coming in and actually buying a lot of these companies.
Well, that's right. I think wherever you look, that's happening. You know, I hear more American voices around me now as I travel than I've ever heard. The Americans are getting out, and the dollar is working beautiful for them. But I've seen it the other way around. I've benefited and I've suffered from these currency movements. I think we're living in extreme times at the moment. And remember, perception with these, you know, these guys who've never seen high inflation. It's still not high inflation. The guys who have never seen the sort of inflation we're looking forward to, wars, and there is a lot of think it through and multiply by 10. You know, there's a lot of panic and there's a lot of knee jerk in the street at the moment. This question started, when do I see it all sort of normalizing? I think not ending. I think normalizing is the word. But, you know, I think this asteroid thing, the ability to knock the asteroid out, I think that's a bit of PR as well, just to tell Russia, this is how advanced we are. And to tell the world, don't worry. But you know, when will stock markets get better? I think there will be a solution to Ukraine. I don't think there will be a solution. There'll be a neutrality of some sort. This inflation will come, and people will see it's not so bad. Inevitably, it could create some employment. People will start valuing jobs again. Because let's face it, you know, people aren't going to work. Most businesses are short of people. I've been brought up to really value my jobs in life, and really value and be scared to lose a job. So, you know, it's a new environment for me when people say can either take it or leave it to go to work and, you know, decide how much time they put in, how many days they put in. And if they don't like it, I'm off to the next job. That's never been healthy, I don't think. And so I think we've got to work all the way through that. So I did have a forecast of October and November. Sadly, I think I'm going to have to revise that one till February, March. That's my feeling then when our market will get into. And when our market does move, boy, will it move. And we'll be driven by those, you know, I know the AIM market isn't all about natural resource stocks and many other company types and brands. But I think we'll have such a run. And I haven't changed. I regard this as an hiccup. A very, very bad one like that. It's a massive burp, in fact. But nonetheless, I see us having our day in the sun, and that day in the sun will last longer, I think, than any junior run. And Kevin's right that, you know, isn't this a time to be loading up? But boy, you need a lot of confidence, you know, when you look at those graphs over a year. As I say, look after those graphs up for all time. It's not such a difficult decision to make. But if you have spare cash, if you can take the longer view, if you haven't got immediate needs for that spare cash, there can't be a much better time than now and over probably the next few weeks to go bottom fishing in the natural resource markets.
Yeah, I mean, when you talk about that, I'm thinking of African Pioneer, I'm thinking of Galileo, I'm thinking of Extract, and there are obviously three of your companies, but I mean, effectively even Kendrick Resources as well, because I don't think the market's got that one at all.
No, they've not got, certainly haven't got that one. Yeah, they
haven't got it, and also it's come to the market at the most horrendous time. So you know it hasn't had a chance really. I think in that perspective.
Well, just have a look at Galileo. I mean, you know, we're actually just now going along the top of the open pit with vertical holes and some inclined holes, just to see and project how close to surface we get, so we can go out for final quotes for quotes to develop the open pit. So that's a project which will be launched in the near future. We've got a whole set of samples in the laboratories for the lithium near our Kamatabi tin. So we're looking for tin and lithium, but obviously we talk about lithium all the time, but the tin potential is extremely high. we went airborne testing down in Bulawayo, and we discovered not only did we verify, I think is the best word, verify that the gold trends did indeed spread in the directions that we wanted, and we actually traced them with the geophysics. But more importantly, we picked up 2 or 3, one of them 12.5 kilometers long, below the greenstone, ultramafic occurrences, which we've gone into the archives and confirmed that they've been some test work before for nickel. And as I think I've said on previous podcasts, if you've got nickel, sulfide nickel, in this day and age, you're in a very, very strong position. And Zimbabwe's no slouch. They've got the capability to mine these deposits both surface and underground. And Zimbabwe are emerging quite nice to be one of the commodity players when we do live in a better world. So then we move over to the Kalahari, of course. We've got our joint ventures with Sandfires. Cobre made those announcements, and we're busy positioning in the Kalahari where our licenses, particularly 253, sit relative to everything else, because they seem to be nicely wedged. We seem to have parallel structures. We seem to have domes in 39. So we're into a very, very exciting territory there. And of course, we're waiting for Afromat to make their decision, which we get towards end of October, early November, on whether or not they wish to exercise their second option. Then the Kalalushi zinc, the Kashitu zinc. So when you look at it, that is really a very nice stable of assets, a really nice stable of assets. And as you say, African Pioneer, the First Quantum now, they're drilling. Yet to get the report, but they're drilling in the northwest. What people are finding, companies are finding up when they're in the northwest of Zambia, they're finding that they're more into Congo type, that big mine, what started, new mine in the Congo, or Coetzee, that sort of mineralization. And you're talking about very big pods of 5%, 3.5% to 5% copper with 0.4 to 0.8% cobalt. Just what the doctor ordered for the new world. So we've got licenses, quite a few licenses, which First Quantum are drilling initial test work to see the prospectivity of those licenses. And down in Ngombo there, we're drilling, of course, and there's a set of results that come out. Results have come out as well, which show that we've got very good gold values, much better than anyone thought, together with our copper. So it's difficult to look through the portfolio and see anything where, that in the copper space, which isn't actually showing legs, really showing legs in a space where mankind knows, and you can have all of the unpleasant things we've talked about, but mankind has no doubt that the copper is in short supply. Now, they can't suppress it for the life of them. The more they try, the worse it gets. Every little tiny chink in the armor, bang, off goes copper wants to go, bang, down it goes again. They manage to suppress it. That will not go on. And copper isn't going to have, as I say, a massive day in the sun for 2, 3, 4 years. And I've said, right, what do you say? Why do you say that? Well, I say that because the gestation period for a large copper mine isn't even 4 years. It can be anywhere between 8 and 12. And just in jurisdictions where they don't want mines anymore, or they feel that they're being robbed of their legacy, and so therefore putting up taxes and chasing away the foreign companies. So watch out for copper. I know that I've been saying this since 2017. I had a period when I was very, very right. And now those who are saying, Colin Bird was smoking his own dope, and look at copper. But my stance has not changed one iota. Just a bit of trouble out of the way, a recognition of a new world, and you'll see that copper take off.
Interestingly enough, though, if you look at copper, is obviously valued in US dollars. So a year ago, we were at around 135, I think it was, US dollar to the pound. And now we're at 1.7 or 1.8 or 1.6 or whatever it is. So in real terms, these companies have actually had let's say a 30% increase in the value of copper in sterling terms, just based on that.
Yeah, that's right. But when I look at copper, as I said earlier in this podcast, I regard the short-term currency fluctuations up and down. I've seen $2 to the pound, and all over the place. And the gyrations are quite spectacular, and have been now for a number of years. What I want to see is that copper will go through several cycles. And if I look at a copper project now, I still look at it. Will it make money at 7,005? Because obviously, if it makes money at 7.5, it'll make it at 9. So you're looking at a commodity that will have its ups and downs. But the reality of life, Kevin, is there are not enough projects on the table. The day of the small miner will definitely come. The big companies, the BHPs, and they know they've got to develop new copper mines. Anglo American have made 2 statements. The new chief executive that there's got to be a terrific investment in copper. So we all know the big boys want big mines by definition, and the gap has got to be filled. So if you want a call option to copper, look at the junior sector on AIM in Toronto and ASX. If you want companies to bridge the supply shortage in the next 2 to 3 years, in my opinion, it's going to be the small caps, and then we'll have a world which hopefully by 2028 or thereabouts might be in balance again with copper. But the opportunities at the moment are absolutely immense, and there's still projects around. Kevin, you'd have thought they'd have all been snapped up, but they haven't. And I can't, I always find it difficult to believe that mature people who've been in the business a number of years can't see. You don't make long-term decisions on short-term fundamentals. And that's been a motto of mine. And you maintain optionality has been a motto of mine. And I think it'll work for our shareholders. I sincerely hope so. And I'm doing my level best. And so is the guys and girls who work with me. We're doing our level best to, in actual fact, be in a position to be ahead of the crowd, if you like, when it does turn.
Yeah, because with the market and quite a few of these stocks going down in value at a time where the commodity is in dollars and not sterling, it seems counterintuitive. It doesn't make any sense, because effectively the assets that these companies hold in sterling terms is going up, and yet the value of the stocks are going down. So this is just the fear against reality, what's actually going to be happening.
Well, that's right. Reality, you've got to part when fear sets in, when that fear and flight syndrome, when a horse decides it's going to run, because it's scared that the tree's going to fall on it and all the wind's getting up and something's wrong, their nostrils flare and off they go, and nothing will stop them. And we're in a period now where, there are many people in London now, I'm sure, with margin calls who thought this is the bottom. This is the bottom. And you can't keep chasing this bottom forever, Kevin. There comes a stage where the wife says, "Stop it now. We've had enough. We've got kids at school. We've got fees to pay. We've got mortgages to pay, and those margin calls can be savage." So I think the vast majority of the retail sector have stopped and waiting and looking, and they know, and we all know, that it will change. But time is the wild card, and there are so many things out there that you can't second guess. We all enjoy we don't enjoy it anymore, I don't think, second guessing Putin. But the worst case scenario doesn't encourage you to go out and buy a lot of stocks. The best case scenario, if you thought the war in Ukraine was, there was going to be some sort of a solution in the next month, might make you rush off and borrow and then actually go again and now, into your margin calls. But inflation, I think inflation will definitely be priced in. We need to see a glimmer of hope in Ukraine, some normality there, and I think you can look forward to much better times. And I try to avoid an absolute connection to small caps and the main markets. And so, I've had some of my best times in this business when the big caps are suffering. So we don't need to necessarily parallel ourselves and align ourselves to the big markets. We'll have our day, and our day will be driven more by an end to that war or some sort of a solution to that war. So, like I say, I've got to push my forecast out, I think, from October, but to maybe February, March. But I'm still confident that this is a short-term solution, not a mid-term death of 1,000 lashes. Or I've got it wrong.
Hey, well, that won't be a first, and I get it wrong every week, so don't worry about it.
Well, that's right. But I tell you what, Kevin, I always enjoy these discussions with you and Phil. But our team, me, we're heads down on those things we can control. Because if you don't, you can't sit trying to second guess dollars and wars. You've got a pack of cards, and you've got to play them. And you've got to play them to the best for your shareholders. And that's what we're trying to do. And I think in no small way we're doing it, because as you see from the announcements, there's some very nice news from all our projects.
Yeah, and ultimately, when all of these currencies are doing whatever they're doing, like we have an incredibly strong dollar, which every commentary is saying doesn't make sense, but it's there. We have a very weak pound. We have a pretty weak euro. We have the lowest ever currency since the records began, I think in 2011, on the yuan, the Chinese currency against the dollar. So all of these things are happening, but surely at these times it is best to own assets and not currencies, because effectively the currencies are what? They're not backed by anything.
You want hard assets, You want hard assets.
Or you want copper, or you want nickel, or you want cobalt.
That's right.
Or you want
That's right. And property, and property.
Or property. These are real things. Even what's happened with coal over the last period of time. Like, you couldn't sell coal for love nor money a year ago. Now you can't buy it.
Well, that's created the biggest dilemma you've ever seen in your life. All these politicians gather together, set impossible goals, never talk to people like India, where coal India is probably one of the biggest employers, and play, various places around the world where there's a coal dependency and they can't just change overnight. And now the lenders are they can't do a U-turn. So it's the banks, the major banks can't lend to fossil fuel enterprises. The major mining companies, major natural resource companies have got to sell them. And so there's a massive funding shortage in a market where the midterm fundamentals are absolutely marvelous in terms of coal pricing. So that's how mankind can really, really have an own goal. Too much noise, too soon. And then nobody dare take a U-turn, because they might lose their job in a bank, they might lose their job in a fund management company, or they might lose their job in a major mining company. So, nobody dare make the U-turn, but you've got a buoyant industry, which is going to be spewing cash out like an ATM there, which has difficulty finding funding. And that's probably the best and the most extreme example of mankind shooting itself in the foot. Too much noise, too soon, without an examination of the fundamentals. And Boris was one which was off there to the conference, getting this guy together, being photographed in some small room where they're making plans for solar energy, for wind farms and the rest of it. Nobody thought, everybody talked. And where did the coal players find themselves? With a wonderful coal price, a relatively secure future in terms of pricing, but a lot of difficulty in accessing cash to build new mines or to make extensions that exist in pits or underground mines, for that matter. Yeah, classic example of an own goal.
Yeah, so private equity is going to come in and make an absolute fortune, and that is happening already, I'm sure.
That is certainly happening. It's a lovely playing field for private equity, hedge funds, etc., who want quick returns and little risk. I mean, let's face it, if you're investing in new plants in a coal mine, what's been going 15 years, with a pricing scenario what you got now, and you can borrow money for about 2 or 3% from certain places and lend it for 12, it's not bad business, is it?
No, and you can hedge the coal price for the next 2 to 3 years anyway. So
that's right.
You can't lose, basically.
No,
So
you
there,
can't.
there are,
A 3-year loan into the coal space for an established operation is a secure investment.
yeah, and there is going to be the same situation is going to arise, I think, for copper, for gold, for all of these things going forward, because they are true assets. They are real. Like I tap on the desk, it's wood. It's real, and I've been talking about that for over a year now. That we really want to be invested in real things, not necessarily things that can just disappear, if you like, which is effectively what the fiat currencies are. We invest in the fiat currencies because we have a belief that they're going to be strong. That's the reason
the
why
problem
we invest in.
is your average person is taught in school that to save, 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 save 10% if you can and all that. In reality, you're never going to make money unless you invest into an investment or an asset, something that actually gives you a yield, a rental yield or another form of income. You've got to have multiple revenue streams coming in. That's how you make money. The best way is spend a third, invest a third, and save a third. If your average 16-year-old or 15-year-old was taught that at school, by the time they were 30 or 40, they'd be multimillionaires if they followed that mantra. So there's a mindset in the UK of save, 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 but actually you get nothing on savings.
Yeah, well, there you go. I've got a gentleman who's staying with me at the moment, and we're talking about inflation, and he lives overseas and not a Brit, but his brother's son was getting married, and he went to the farm, and he said, "Wow, it's the size of that marquee you built there, just in case it rains. What did it cost?" And he said, "Oh, about $15,000." I said, "Do you remember Dad bought this farm 40 years ago for $15,000?" And that really puts it in perception. That really puts it in. That really gets you the feel for crikey. If your money sits there, it just melts. You might as well get a pair of scissors every 10 years and cut a bit off your dollar notes, or your pound notes, or your euros, or whatever you've got. Inflation is savage if you don't put it to work, and hard assets always seem to work. Yeah. Stock markets have got to be put in perspective, and equally, when with all this sort of worry, one should also remember that stock markets are not the economy really, and stock markets are looking 9 months ahead. So let's assume that the rest of the world, not quite so crazy of Brits who are going to spend their way out of this problem, but let's look at the rest of the world, and you should be seeing some signs of normalization within 6 to 9 months. That's what markets like. So, like I say, I don't necessarily link top markets with bottom markets, little companies with big companies. But we should be working our way through all this. So by year end, November, we should see the main markets kicking. The main markets, I'm not talking about our markets, the main markets kicking up, because they'll be pricing in the positive effects of the measures which are being taken now, which are seen to be draconian. But nonetheless, I think we'll do the trick in 6 to 9 months.
Colin, tell me this. You obviously you've been about a few more years than we have. So, how did you make what you made? I don't know how much you're worth, but I'm not asking that question. But through your life, what were the things that made you the most, if you like? What did you do that allowed you to achieve what you achieved?
Those who know me well would probably laugh at this comment, but I think consistency, not diving in, because I made a lot of deals. One could see me as a deal a minute guy, but I'm not actually thinking out the deals. Always maintaining optionality. And really, I think the biggest one of all is, well, there's two of them really, is make sure you're working with very good, capable people. You can't do it on your own. Make sure you really make sure you're doing you're working with capable people, and then heads down and control the things you can control, and then let the rest go by, because the rest will go up, it'll go down, and be all over the place. But just get on with what you're good at, and or think you're good at, and I can't overemphasize being surrounded by people with their own ideas, with their own initiative, in an environment where they're allowed to use that initiative and take ownership of their projects. And that's helped me through my life anyway.
They call it aces in places, don't they? And I think there's always a phrase: surround yourself with people who are better than you, and never be too arrogant to admit that there are people out there who are better than you at that job.
I'm afraid that is the case now. When I first started in this business, you're a geologist.
Yeah.
Now you're an epithermal geologist, an hydrothermal geologist. You're a fluid mechanics geologist. The day of the generalist is gone, and it really falls right into the way I work, because we've got a small, very, very capable team, and we go out and we hire in expertise on a consultancy basis. There's no cars, no medical, no pensions, no big salaries, no trying to find and work when that particular project finishes. So, the world, our resource world has moved very much that way, that a lot of guys have set up their own consultancies because they don't want to be dependent on bigger companies. So they're always available to you. And similarly, I think it's quite terrible when a small mining company gets a lot of fixed assets, because, exploration being the business it is, the risky business. If it doesn't quite work out, or if it doesn't work out, let's get to the point. If it doesn't work out, you don't want to be left with a load of cars, vans, trucks, drill rigs. You just basically move on. And so I really enjoy that environment. So it's good, strong, small team. Everybody knows what they're doing. Everybody's got accountability and responsibility. And as I say, maintain the optionality and get your head down and get on with what you think you know.
Well, I think on that note, I think we'll wrap up, Colin, and just say, as ever, it's an absolute pleasure to talk to you and put the world to rights.
Yeah, nice chatting to you, and confident as ever for our companies, and remain. The Armageddon guys can go where they want, but I'm very confident for what will be a new world when we work our way through this.
So, Colin, today you're going to have the opportunity to have your favorite meal in the world. What would it be?
Well, that's predetermined. I think it's going to be a sea bass. It's not necessarily my. I wouldn't go to say it's my favourite meal, but I've been invited out, and I've already mentally picked a sea bass. So I think today is predetermined and ordained.
I thought being in Portugal, you'd be on the old bacalhau or whatever it is, the cod.
It's a bit in short supply.
Is it?
It is, yeah. It's a bit hit and miss.
Supply chain issues on the fish.
Yeah, bloody hell. I mean, if you walk in supermarkets nowadays and start seeing vegetables at €7, €8, I mean, gee whiz, it's, and not to start the podcast again, but it's a lot of this inflation, is supply chain and not the real cost of doing things. So when you could actually see a dramatic downturn in the rate of inflation with just a couple of issues, a couple of matters turning direction.
100% of this is caused by the supply chain issue, supply and demand. That's what's causing inflation issues for sure.
Yeah, that's right. And boats in the wrong place, boats not having return loads, cost of freight, people not honoring letters of credit. All sorts of things which are not real underlying inflation. They're just basically collapse of the logistical systems.
I blame Egypt. This all started off in the Suez Canal, when that evergreen boat got stuck. You can blame the Egyptians for this one.
Yeah, evergreen.
Maybe
we should just make it worse and put the fees up on the Suez Canal by double, and then see what happens.
Don't say that. It might happen. Anything can happen.
It could well happen.
Yeah.
All right, Colin. Well, thanks a lot again, and we look forward to the next one.
Thank you very much indeed, and apologise to our listeners if we've gone on a bit about things, but I'd like to assure them that we're heads down and doing the best we can in this difficult environment with some very good assets.
So, I mean, it's always good. It's always good, isn't it, to catch up with Colin and listen to his sort of musings about, not only his businesses, but obviously about the economy and the markets, because he's certainly been around a long time in terms of seeing these things play out. What are your thoughts on the way things are progressing now in the UK? I mean, obviously we've seen what is effectively the Tories fearing a wipeout after 3 weeks of Truss being PM. It's probably not the best start to her prime minister role, is it?
No, the whole thing's crap storm, isn't it, really? Let's be honest. I mean, I said it last week on the Sunday roast as well, that this is such a sea change in terms of the way that you're going to manage the economy, that you're just going to try and basically buy your way out of it in terms of consumer spending by reducing taxation. Excuse me. But the main thing seems to be the outcry was the taxation changes for the wealthy, which weren't really necessary. The 45% to 40% to me just wasn't necessary.
Yeah.
So some of the stuff was just seemed like we're giving it away to our pals type scenario.
Yeah, and the irony is there's been a lot of these entertainers or whatever, influencers or whoever, people in the A-list celebrities who've come out and actually said, do you know what? I don't want the extra 5%. Do you know what I mean? I'm quite happy paying taxes, and they condemned and criticized this whole trickle-down economics and said, look, 30 years ago, they tried this exact same thing with trickle-down economics, and it's been proven that it only gets about halfway. So the people who actually need it the most never actually get it and benefit from it. So yeah. I think you're right. I think that if you look at 40% and 45%, if you earn £1 million a year, you're effectively would be getting an extra £55,000 in your pay packets across the as an annual extra by saving that 5%. But whereas this 1% that they've put on the 19, the drop from 20% to 19, it's only something like an extra £170 a year. So for the nurses and those who are on that, the frontline workers who are on the lower wages, it's an absolute kick in the nuts to them.
Yeah, no, the reality is it should have been maintained at 45%, maybe even increased to 50%, and actually reduced the base rate to 18, 17, whatever, because that would have been the costings. Yeah. And then it wouldn't have had any material effect on how the economy is going to grow. Yeah. If a millionaire gets an extra 50 grand a year, what's he going to do? He's going to have 50 grand a year more of savings or investments, but probably not in businesses and things. But anyway, we've had some different news this week, haven't we? We had very interesting news from KIBO to say that they're going to be spinning another business out, just like they did with Mast.
We managed to catch up with Louis early in the week, and here's what he had to say.
Good morning, Phil. Nice to be talking to you again. Yes, we are going through quite a busy and very exciting period at the moment.
Yeah, obviously, just this week, we heard the news that KIBO intends to advance its corporate strategy with a strategic IPO spin-out. Do you want to tell the listeners all about this proposal for an IPO and the rationale behind it?
Well, I think as we tried to explain in the RNS that went out yesterday, and consistent with what we've been saying to the market for a while now, we have three particular focus areas for KIBO in pursuit of our strategy in renewable and clean energy. And those three focus areas, again, just by way of reminder, is one in the reserve power, where we have MED that's well away and doing quite well at the moment. The second focus area is in long duration storage, where we have secured and signed some really strategic agreements, most notably the arrangement with CellCube, and where we are at the moment pursuing quite a few very exciting projects as we've announced in the past. And then the third one is in the baseload environment, in the renewable clean energy baseload generation environment. And that is what this RNS was all about. We've been working very hard over the past couple of months, actually the past year, to be honest, where we've secured and produced or not produced, put in place a comprehensive and very exciting portfolio of baseload clean energy or renewable energy generation that consists mostly of our waste to energy projects in the UK and in South Africa, and then also the conversion that we're busy with on the biofuel side. And we're now pushing this particular focus areas into a direction where it can also come to its full potential, its full to its own right with the spin out that we announced yesterday. It is a very specialized focus area. It's a very specialized business case, a very focused business case. Just MED has got a very focused and specialized business focus. This is the same. And we believe by doing the spin out, we will be able to, one, create and unlock significant value for the KIBO shareholders on the short term, but also position this particular business area in a way that it can come to its own right and deliver significant returns in time to come.
That's good. Louis, just tell us a bit more then about the, I think it's the biogas using the previous assets. I think the coal assets, I was quite intrigued by this. Tell us a bit more.
So, Kevin, that's an initiative that we've been busy with for quite a while already, as is evident from several announcements that we put out over the last months. We've been looking at a way of bringing these utility scale projects back into the fold as renewable, clean energy generation projects. We've identified a biofuel technology that we believe is a solution for this. We've done test work at bench level. That has come out very positive up to this point in time. And what we've proceeded to do, and we announced that a couple of weeks ago, is to now commission a comprehensive study to see whether we can do this at industrial scale. In other words, at utility scale, at the 300 megawatt power station level. That work is underway. We are busy doing that work, or we are busy with reviewing the proposals that we've received for that study. And we hope to get going with that very soon and to get back to the market with more updates on that. Now, if the results that we've seen at the bench level continues to prove positive at the industrial scale level, we will be able to bring these projects back into the fold, so to speak.
Okay, so what is actually, sort of without too much detail, what is actually chemically happening? What are you trying to do? What is the feed source, and then what is happening?
We will update the market in due course on exactly what this is all about. It's too early to and commercially too sensitive to comment on that and to go into the details of that at this point.
Basically, I'm just looking at KIBO now, or what it will retain after the project portfolio. You've got exclusive rights to long-term energy storage and solutions with CellCube. You've got majority interest in the national broadband solutions, and I think a 61% interest in MAST, plus 21% interest in Katoro. I mean, it looks like quite a big company now going forward as KIBO.
I would agree with that, Phil. I mean, it's quite comprehensive in terms of where we're going with all of this. And remember, and without saying too much about it at this point in time, if you look at where we went with MED, where we are going with baseload generation in renewable and clean energy, that should tell you something where we're going with long duration storage as well. And at the same time, it's really important what we are retaining within KIBO are critical, and I cannot emphasize that enough, critical enablers for these various spinouts that we're doing. That would also, apart from enabling these spinouts that we do at a technical and operational level, it also provides revenue streams for KIBO through our own subsidiaries, but also through third parties.
Sure, and also KIBO retains 75% interest as well, I believe, in use. Is that correct?
Yeah, that's correct.
So from the RNS yesterday, you put in a valuation of about 7 to 10 million pounds on use. That's going to IPO. The other 25% would IPO.
And I just want to say we didn't put a valuation of 7 to 10. We said we want to raise in the vicinity of 7 to 10 million in the IPO.
Okay, so that would put the valuation then at 4 times that figure.
I think one can infer that, yes.
And KIBO would then own 75% of use, which would effectively be worth 20 million, 22.5 million.
Again, based on the rationale that you're following, that would be accurate.
Okay, so KIBO is currently worth about 5 million, and most of that valuation is taken up by MAST without the other assets that it has. So it seems, as we've said before, the market doesn't get the valuation of the assets that you have.
Again, as we've said before, Kevin, that's our view as well. And then if you want to add a little bit to what you said, or underscore what you've said just now, if you look at all these assets that we're talking about, in terms of MED, they are already producing revenue generating assets there. What we've announced yesterday is that we have near-term production expectation on the assets that we're spinning out as well. Here, if you follow pattern that we followed in MED in terms of getting that into revenue generation very quickly after listing or admission. And if we do the same here, then it makes the point that you make even more relevant in terms of the valuation.
So do you think that, Louis, that this kind of this leverage with visibility for use in KIBO, do you think that will help them working together to bring in maybe more investors and more opportunities? Do you think that there's like a synergies between the two in the future?
Oh, definitely. I mean, and that's part of the reason why we're doing what we're doing, because we are developing a portfolio with a very specific niche. Each one of these focus areas, as I call them, have got a very specific business niche, and it's also got a very funding audience from a debt and project funding perspective, and it's also got a very specific operational skill set that is required. So we believe that that will optimize or really realize the full potential of the value in that, supported by what we are retaining in KIBO at the same time. Slightly off the point here, maybe for what we're doing at the moment also is, KIBO has carried a very heavy burden over a significant period of time to do the heavy upfront lifting and to discount the upfront risk on all of these projects. And by what we're doing now, we're also mitigating further dilution in KIBO, and also at the same time, creating a position where we can start to unlock value for our shareholders who've been very patient with us for a long time, and start bringing that together at the same time. And whilst we're doing that, we're also positioning each one of these business cases with the best possible chance of success.
Do you really see KIBO now as being a very different beast than what it was when you just had the coal assets, sort of a couple of years ago? Do you think now is the time for KIBO to go out there and really progress?
KIBO has been a different beast for a long time already, but I think for the first time, people can now really see that, physically see it in terms of what we're doing at the moment.
Sure. Louis Coetzee, CEO of KIBO Energy, thanks very much for your time.
Yeah, thank you very much, everybody.
So I think that was a good recap, and it is an interesting spin out, isn't it? It seems that as a company grows and in the number of projects and sort of assets that it has, it's the obvious choice, isn't it, to set up a new company. And looking at the actual investments and assets that KIBO has in the form of Mast Energy and Katoro Gold, it looks like it's vastly underpriced just on the value of those themselves.
Yeah, there's no doubt it's undervalued. If he gets that IPO away at the prices he's talking about, and I was talking about I think in the RNS it said 7 to 10 million, then effectively KIBO's worth 3 or 4 times what it is worth now, at least.
Yeah, I mean, they're going to raise between 7 and 10. That was what it said. But yeah, I mean, in terms of the actual market cap, it's probably going to be a few multiples of that once if and when it finally lists.
So 75% of that will be kept by KIBO. They're going to sell 25%, and that's what they're going to raise. So you're looking at KIBO being worth well into the 20 millions. Yeah. And Mast is also moving forward as well. So, and KIBO's currently worth 5 million. So yeah, there's a big thing.
What else has been on your radar this week? I mean, it's been a pretty...
Well, it's more about what is strong in this current situation, isn't it? Because we've had stocks dropping off all over the place, and there's news been coming out as well. Chill accounts, basically this has cleared the deck now from before Callum Somerton took over. So, it had a pop-up of 20-odd% there on Thursday, I think, and holding pretty steady on Friday now that the results are out. The results are horrible, basically. 600 and something thousand pounds worth of revenue, just a mess, but that is the past mess, if you like. And all I can see is that Callum has cleaned that mess up, reduced costs drastically, as you can see by the accounts. I think that he's starting to take away a lot of the costs that are not required and really use every pound to try and get money coming in. And Tango looks very strong. They had an announcement this week as well. Prospect Energy, gas in Spain, no surprise. I think went into the 9s this week.
Yeah, it's had a really good run, that one, from the sort of 4.2p when we first interviewed Mark Routh. So that one looks very strong, actually. I've been tracking that one the last few days, and and it does look really good. I mean, I think the broker notes around the 20p mark, and it's certainly that the volume has been really steady and strong. So that's one that I really like the look of. The other one is Predator Oil and Gas. Obviously, Paul was on the rose last Sunday. It's moved from the 7 to the 8p. Volume's been pretty good, and as he said, alluded to, it's always been a stock that's been quite favourable within the retail space. So it looks primed, and hopefully as they move towards the spud of MUO2 and the well pad construction, I'm hoping that it will continue to move on up that one.
And there's a theme going on here, isn't there? MAST is energy, electricity. CGO is going to be coal and energy. And really, we also need to mention Ben's Creek in there as well, because Ben's Creek had its AGM this week as well. I think, Phil, you attended that.
Yeah.
And everything is in place there. Just the valuation doesn't add up right now.
I think it's critical that he gets, now that the permit's been approved for the second highwall miner, I think it's absolutely critical that he obviously, once that goes into production, and then they can ramp up to the second shift on the first and then the second highwall miner, and they ramp up the production, then I think that's when we'll start to see the real value return. Not that ironically, there's more value in it now than when it was at 108p, go figure.
Yeah, no, it's crazy. It's crazy. And we got a message there through that the high volt B coal price has just gone up another $4. So it's gone up 6. I think it's approaching 290 now or thereabouts. So yeah, a good one there. So, what is the story there then? Energy, and maybe AFP license for, I'm not going to pronounce this right, but is it Umbogo or whatever it is? They got their license through
on Gombo mine.
On Gombo. And I mean, that could be a producing copper mine within 9 to 12 months now. So, that really could change the world in terms of what's going on in the scenario. Very interesting also just in terms of what's happened this week. Even though the Bank of England had to step in there with 65 billion, up to 65 billion of bonds, because there was major problems in the pension funds, I think, because some of the values had lost, some of the bond values had lost up to 50% because of the soaring, not interest rates at this time, but the soaring cost of borrowing that the market says is required. So it has settled. The dollar pound has gone up. I think we were 111, 112 on Friday, the highs, which is basically what it was last Friday before the budget. So, hopefully that means things have settled a little bit, but these are radical times, and the Conservatives have obviously taken a radical decision to go for growth, and who cares about anything else? So, it's interesting time.
Did you see that announcement that it was an unusual move? I think there was a report from the OBR where they set out the economic plans, they set them out, and they thought that they played a part in the market jitters. I think that the Office for Budget Responsibility, there was no report basically. So when they set it,
but there was a big, or not big, but a strange move by Liz Truss and the Chancellor, that they went to see the Office OBR people, didn't they, on Friday? And then they've now made an announcement that they've agreed that the draft document will be out next Friday.
Yeah.
So what will that draft document say? We've got to borrow a lot of money.
Yeah.
It's not going to say
at a very high interest rate.
At probably a much higher interest rate they're anticipating. So, yeah, it's not good. But anyway, there are some solid stocks out there. And, when you look at them in terms of the true valuation and potential, we've got some serious upside there. And I know I'm Mr. Positive, but I do think as the market is forward looking, we are looking like 9 months down the line, some of these stocks are going to be worth considerably more than they are. I mean, another one just to mention just before we go is also Extract. More gold pours, Furbride's coming online. And, the elephant in the room is what's happening in Australia. And, it could potentially be absolutely massive. That stock, again, could be life-changing.
Good. Well, on that note, I think we'll wrap up. So have a good week. I'm going to be in your presence for a few days next week, which is going to be interesting.
Yeah, I'm coming to London and we're going to be doing the Roast TV. And yeah, I think we're going to be recording a few of the few CEOs. I've had conversations with Callum from Chill. So hopefully he's going to be one of the first that we record in the TV studios. So yeah, you'll have to get used to the look of our faces as well as the sound of our voices. Which, we need to go shopping for some new bodies, I think, or faces.
What is that, Body Shop?
Or is it just clothes? I'm not sure which. Yeah.
All right. Well, have a good weekend.
We're going to need makeup. I've just realised. Otherwise, we'll shine. Okay. Yep. Have a good weekend.
Speak soon. Cheers.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.